Now, last week saw a sharp and historic sell-off in the metals markets, especially precious metals like gold and silver, but also extending to industrial metals such as copper. Prices plunged at their fastest pace in decades. Gold itself dropped around 9 to 11% in a single session, its worst daily fall since the 1980s. Silver, even more extreme, a single drop of 35%, its largest again since the 1980s. And copper and other base metals also fell significantly as sentiment deteriorated. Now, this sell-off not only hit commodity markets, but it also spilled into stocks and other risk assets, dragging global equities lower and lifting volatility. So looking at the technicals here, there was a macro catalyst that started this move to the downside. But if we just consider purely from a technical perspective, on the 4-hour time frame, gold was over 10% away from the 50-period moving average. This is a huge overextension, and if we scroll back to the left and we look for similar periods of overextension, you'll see that the distance back to that moving average didn't really ever exceed much more than 5.5 to 6%. So to be 10% away is huge. Now, if we go to the daily time frame, you'll also see that we hadn't corrected back to that 50-period moving average since August 2025. That means that a mean reversion play had to happen. Markets can't continuously just go up. They always revert back to the mean, back to the average price. And that's what we saw from a technical perspective. If you look at silver, this was even more extreme. Silver had overextended from the daily 50-period moving average by 35%, and that's largely the correction we saw on Friday, that big 35% drop. Where from now? Well, both gold and silver today have corrected back to their 50-period moving average, and they are testing key support. We've subsequently seen a bounce from that area, so buyers have definitely stepped back in. If you're a gold trader or a metals trader in this market, I personally recommend widening parameters on these instruments, as their daily ATRs now are wider than they've ever been. One additional market structure note from last week was that the London Metal Exchange, the LME, the world's largest industrial metals marketplace, also experienced a brief technical outage that delayed trading for about an hour on Friday morning. So while we were going through one of the biggest metal sell-offs since the 1980s, the LME experienced an outage. Unbelievable timing. So moving forward, metals will remain tightly linked to expectations around the US dollar and the future path of interest rates. Now, if the dollar continues to strengthen on higher for longer expectations tied to the Fed outlook, metals could remain under pressure. But if those expectations soften, it would give gold and silver room to recover. And this is where markets will continue to digest the implications of a potentially more hawkish Federal Reserve leadership.